Reason number 4 not to pay off your mortgage early is your 30-year mortgage payment is actually an amazing inflation hedge. So if you think about inflation means that the value of the dollar actually erodes over time.
This is Techie Personal Finance Bootcamp, where I help tech professionals in their 20s and 30s balance a great life today without sacrificing their future possibilities. I'm your host, Lucas Caceres, certified financial planner and founder of Level Up Financial Planning, where I help educate, coach, and build strategies with my clients to help them take their financial confidence to the next level.
Disclaimer alert. This information's for education, so don't just go use it. First consult with your financial advisor, because that's way more legit. That's it.
So that was Orlando Gomez, and you can catch him. His episode already dropped for this season. So go ahead and find it in your Techie Personal Finance Bootcamp podcast. Find Orlando Gomez, and you can hear about how he broke into tech by writing a jingle. Thank you for joining Techie Personal Finance Bootcamp. I'm excited because today I'm going to be going over the 5 reasons not to pay off your mortgage early. And so if you think you misheard me there, I'm saying you do not want to pay off your mortgage any earlier than you need to. And there's 5 key reasons for that. Some of them might be obvious, might be ones you've heard of. There's at least one that I know is very rarely talked about, and probably one of the biggest reasons why not to pay off your mortgage sooner than you need to. Mortgages are definitely one of my favorite tools that people have access to. So credit cards is one of them. I made a whole episode on that at this exact time last year because I was cashing in some of my credit card rewards, but mortgages are just as great, super helpful at building wealth. And so it's just one of those reminders for you that not all debt is bad. You can mismanage using debt, and there's ways that it might not work for you if you don't understand it completely. But a mortgage is definitely one of those great debts that could end up adding a ton of wealth for you and your family. And just kind of quickly to recap on why mortgages even exist in the first place. Well, it's not likely you'll be able to purchase a home in cash. Home prices increase faster than inflation. So it's not like it's only going up 2% a year as far as home values, especially over this last handful of years. Home prices are already high. So when you factor in a percentage of a very large dollar amount, it just ends up being a really big moving target. And you could cost yourself a lot of money thinking that you're going to save up to paying cash because it's just going to move further along. Just using a quick example, saying hypothetically, if a $500,000 home were to increase at 10%, well, that's going to cost you an additional $50,000 if you wait. So that's definitely a big motivation to get a mortgage. And then you're able to have a home that's likely going to appreciate for you as long as you take care of it. And there's nothing unique happening in your area that you make the purchase in. And the biggest thing with the home purchase is, can you afford the monthly payments? Is it putting too much stress on you? So make sure those things are going to be affordable. So moving forward, though, we'll be talking to you as if you've already had a mortgage, and most of you probably do at this point. So reason number 1, not to pay off your mortgage: interest rates are extremely low. They've been bouncing near the lowest ever. And so it's very likely you can find an interest rate for a mortgage at 3% or even lower. We closed on our new home purchase a few months ago, and we locked it in at 2.65%. So just ridiculously low, near free money at that low of interest rates. Reason number 2 not to pay off your mortgage is you may receive a better return on your investment than making additional payments to your mortgage. So that's what we're talking about here. I'm not saying don't make your minimum payment. You want to make your mortgage payment, but when you have excess funds and you think about where best you can put that, a lot of times a mortgage tends to be high up in consideration for a lot of people. And you just want to weigh the facts of, well, what's all going on in your situation. And if you put it here, you're going to guarantee yourself that you'll save whatever percentage your mortgage is. So hypothetically, let's say 3%. If you pay an additional $1,000 a month towards your mortgage payment above and beyond what your normal mortgage payment is, well, you're guaranteeing yourself a 3% return. So that's how you could look at that. But if you want to take a step back and think, well, is there a way that I might be able to get a better return with only taking on a reasonable amount of risk? That's what you want to consider for this reason number 2. Reason number 3, this is probably the biggest one, the reason why it makes sense to have mortgages in the first place. So reason number 3 not to pay off your mortgage early is you have other goals of balance. So maybe if the only thing you ever wanted to do in life was purchase a home, or pay off your home and just own it completely outright, well, that means that it's might be crowding out some space for some other goals like travel, having a family, getting married. Most things in life do cost money or have some kind of money tied to them. And so if you're too focused on this, you might be giving up some of the flexibility and opportunity to be more diverse, have different experiences that you actually can do and afford if you don't pay off your mortgage so aggressively. And the kind of opposite end of that is, well, you could definitely pour into your mortgage and pay that off and say, hey, I'll do that fun stuff once I don't have any debt. Well, even if you do try to do that and pay it off really quick, it might take 10 years. So you're just going to wait, put your life on hold for 10 years. In a lot of situations, it doesn't make the most sense because the time, as we know with COVID and any other kind of random experiences that happen in life, is we're not guaranteed anything as far as tomorrow or next year or 5 years, 10 years. So you definitely want to enjoy life now too and kind of keep those things balanced. So reason number 4, this is the biggest one, actually the biggest inspiration for recording this episode. So reason number 4 not to pay off your mortgage early is your 30-year mortgage payment is actually an amazing inflation hedge. So if you think about inflation means that the value of the dollar actually erodes over time. So if you have $100, well, by next year, it might only be worth $98. It'll still say $100, but you'll only be able to purchase $98 worth of stuff we know today. So keeping that in your mind as far as how inflation works. I'm just going to run through a quick example. And if you're happen to be watching the video here, you'll see how dramatic this can be. So year 1, let's say use a hypothetical monthly payment of $1,600 a month. Well, just with a 2% inflation rate on average, by year 10, even though you're still making the same $1,600 to your mortgage payment for principal and interest, that mortgage payment will only feel like $1,307 today. So that shows you the power of inflation and how ridiculous it could end up being over time. Because if you think about inflation, one of the things it does help do is helps increase your income. If your income increases faster than inflation, then you're actually doing way better than most people. But that's an important thing to factor in. And if we look this thing out even 20 years out, well, then it only feels like $1,068 that we know it today. And on average, if we looked and just made every single payment for the 30-year time period for fixed mortgage, then it's $1,235 is effectively what it would feel like in terms of money that we know and understand today of $1,235 a month. And what this equates to, again, using that 2% inflation rate, is the effective interest rate that you end up paying when we factor in inflation is really only 1.8%. Or 1.08% actually. So it's even lower than that. So even closer now to free money at that point. So reason number 5, not to pay off your mortgage. And this one, I put it last because it doesn't apply to everyone. Something happened a few years ago in 2017 where the tax code was changed substantially, where this used to be a bigger deal than it is now. That is that you may benefit from your taxes by having a mortgage. And you still may be able to. It just depends on if you're able to itemize your deductions. Most people do not itemize their deductions. And that big change that happened in 2017, or at least one of the big changes, was your standard deduction just went up extremely high. And that meant that a lot of people that had itemized before are no longer doing so. And if you think about what it takes to itemize, is it takes your state income tax, it takes your property tax, and it'll take your mortgage interest. Those are the most common ones. If you are charitably inclined, that also factors into those itemized deductions. So those are the 5 reasons. I'll kind of run through those again just for clarity, but interest rates are extremely low. So reason number 1, you may receive a better return on your investment. That's reason number 2. You have other goals to balance. That's reason number 3. And the one that is very rarely ever talked about or mentioned is your 30-year mortgage payment is actually an amazing inflation hedge. And last and maybe least is you may benefit on your taxes. So hopefully all of that information is valuable to you as you kind of consider balancing your goals and objectives as far as how you're building your own financial strategy guide. And as always, reach out to me because this kind of outside the box thinking is one of the things that I think my clients value. Is we're not going to just look at things from one angle. We're going to look at all the pros and cons and just make a very educated decision at that point.
Thank you so much for listening to Techie Personal Finance Bootcamp. You can find show notes by visiting levelupfinancialplanning.com and finding the podcast page. You'll also be able to find strategy guides, videos, and cheat sheets to help you take your financial confidence to the next level. If you feel this episode has added a ton of value for you, please rate and share this with friends and colleagues. Catch you next time on Techie Personal Finance Bootcamp.